Welcome to Wall Street. The financial battleground where companies don't just compete, they're here to dominate. In this game, the best businesses don't rely on luck. They use strategy. And when they need billions in capital, they have two choices. Number one, sell equity and give up control. Or number two, raise debt through bonds. And a lot of smart businesses use bonds to fuel growth without handing over control. Because unlike stock issuances, bonds allow companies to borrow at fixed costs, sometimes lock in cheap interest rates, and to leverage debt to dominate markets. Let's break down how Tesla and Amazon have played the bond market like Wall Street pros, raising billions without losing their edge. So back in 2019, Tesla needed billions to fund Model 3 production, their gigafactories and R&D. And instead of diluting shareholders by issuing new stock, Tesla issued $5 billion in convertible bonds. A brilliant financing strategy. Why convertible bonds? Because there were lower interest rates. Tesla paid less interest compared to regular bonds because bondholders got the upside of potential stock conversion. And there was delayed dilution. So instead of issuing shares immediately, Tesla structured bonds that would convert into stock only if Tesla's stock prices soared, which they ultimately did. And finally, investors were betting on Tesla's growth, and Elon Musk capitalized on that optimism.
Sales have far exceeded production, and production's been pretty good. So we're actually doing well, and we have a decent shot at a record quarter on every level. If not, it's going to be very close, but we've got a shot at a record quarter.
That could mean that they come close to hitting the estimate that is out there on the street for Model 3 deliveries hitting 73,900 vehicles.
What happened next? So by 2020, Tesla's stock prices skyrocketed, triggering conversion. So instead of repaying the debt in cash, Tesla allowed bondholders to convert their bonds into highly valuable Tesla shares, essentially erasing the debt. Now let's talk about Amazon. So back in May of 2021, Amazon issued $18.5 billion in bonds, one of its largest debt offerings ever.
We hear that they're targeting around $15 billion for the size of this, and Amazon doesn't come to the market very often, which, like you said, should seem obvious. They have so much money, why would they need to borrow more? But when they do come, they've tended to bring some pretty big jumbo bond sales. Last year, it borrowed $10 billion in a sale.
Why? Because interest rates were at historic lows and Amazon locked in cheap financing before rate hikes. And where did the money go? So Amazon used a portion of this bond issuance to buy MGM Studios for $8.45 billion.
Amazon originally gained a large ownership stake in the franchise in 2021 as part of its $8.5 billion purchase of MGM,
securing franchisees like James Bond for Amazon Prime.
Amazon taking control, meaning the future of the Bond franchise is now likely to take a new direction.
Amazon pumped capital into fulfillment centers and AWS data centers to keep scaling its global dominance. So the genius of Amazon's debt strategy was to lock in low rates. Amazon borrowed at some of the lowest interest rates ever recorded before inflation caused a spike in borrowing costs. And instead of selling shares and giving up ownership, Amazon kept its stock intact while using debt to expand.
The 40-year security that Amazon came to market with, and the amount of duration that's come into the index this year, the amount of duration is increasing. Yeah, the index is increasingly tight. Help me work through that.
Well, so I think what that is telling you is that the companies are making the right decision. That is, debt is very, very cheap, and therefore extending your duration as much as possible.
And of course, there's the tax advantage. Interest payments on bonds are tax deductible, making this an even smarter financial move. So what happened next? In 2022, interest rates surged as the Federal Reserve fought inflation.
The Federal Reserve raised its key interest rate for a 7th time this year.
If Amazon had waited, borrowing would have been way more expensive. By acting early, Amazon saved hundreds of millions in interest expenses. So Amazon didn't just borrow, it borrowed at the perfect time, making debt work in its favor. Bonds aren't just an accounting transaction. They shape how companies grow, invest, and compete. Understanding how debt works in financial strategy separates good accountants from true financial leaders. Mastering bonds isn't just about financial reporting. It's about understanding the chess game behind corporate finance.